The balance sheet is an important document or report in your accounting system that tells you that your assets are equal to your liabilities plus your equity. So that's known as your basic accounting equation. And if we just go to gravybooks.com, we get logged into an account automatically, and we'll take a look at how some transactions affect the balance sheet. So if we look at our balance sheet right now, it's just empty because we have 0 transactions in this system. If we go ahead and create a transaction such as owner's equity, let's say we start with $1,000 in our bank account. And create that entry and go back to our balance sheet. It will show that we have $1,000 of assets. That's our bank account. No liabilities yet, and then equity it reflects that asset. So a way to think about this is that every penny in our assets needs to be explained by either a liability or an equity. And a way to physically explain that is that if you have legal ownership of an asset, if you have legal ownership of this dollar, you need to explain that ownership. Either you borrowed to be owning that, or you earned it, equity. So that's kind of the basics of a balance sheet. And there's another important distinction here is that our P&L will get collapsed into one line on our balance sheet. So let's go into our transactions and just create some sales activity. So we will create a sales GL account. Let's say we do $100 in sales into this bank account, and then let's say we do some basic expenses. So like $10 in expenses out of bank 1. So we have 2 entries here, $100 in sales, $10 in expenses. If we go to our balance sheet, that gets collapsed into that $90 entry. So if we look at our profit and loss, this entire report gets collapsed into that one line on your balance sheet, which shows your net income. The other section here is your liabilities. So an example of how you would have something there is AP would be common, but let's do a simpler example of taking out a loan. So let's say we have a loan liability account, and we are going to take out a loan for $25, and that'll go into our bank account. Oops, 25 debit, and credit goes here. So if we create that entry and go to our balance sheet, we'll see that we explained basically that $25 additionally here with a $25 loan. So your balance sheet, in conclusion, your balance sheet shows that your assets are equal to your liabilities plus your equity. If you use an accounting software such as GravyBooks, it's impossible to break this. But if you use Excel or paper with unbalanced trial balance, you could get these numbers messed up. So this is a basic example of your balance sheet and how transactions affect your balance sheet.